Welcome back. You're still watching Hot Stocks right here on ET. Now let's get in the management of Blue Star. Satish Jamdar, who's the MD of the company, joins in to discuss their earnings. Mr. Jamdar, thanks very much for taking out the time to speak with us. It looks like a steady quarter for you this time around, even at the EBITDA level. What has led to this, and do you think that this is a sustainable performance, 10% growth, because there has been a considerable drop in interest costs? Do you think that's been a key driver for your profitability?
Yes, good morning, Tanveer and Neeraj. Yes, it's actually all the parameters have improved, if you notice, over the last year's first quarter, and that's the way we compare, because that's the like-to-like comparison. The good thing is borrowings are down, the margins are up. Growth has been okay. I mean, it's grown, but we wished it would a little better. On the product side, you see the cooling products are done very well. In fact, they have overtaken the segment 1 this quarter, if you noticed, for the first time. And this is all part of a plan we had to try and improve our showing. If you remember, Q1 last year was a profit, but then after that, we didn't have very good 2 quarters. Of course, it was profitable right through. The year before that was 3 quarters of losses. So we come out of that, and it's now, I think this is the 5th quarter of sustained profit. Many steps we took on cash flow, on borrowings, on interest costs, even on hedging, new products, setting up new facilities for the cooling products. Many items, I think, have paid dividends. The biggest one, of course, was segment when you see the improvement in the margins there was the outcome of what we've been doing for the last so many quarters of ensuring that we book the right jobs, not going for top line only, but looking at cash positive jobs and also profitable jobs. And so we let go few, therefore there's been degrowth there, but I think the strategy we took at that time has paid dividends now. This was the plan. I think it's worked out.
Mr. Jamdar, morning. Neeraj here as well. So, am I to assume that the troubles that you've had in the past, and we've discussed them 3 or 4 quarters ago, are those a thing of the past? One, on the margins front, do you continue with this 5%, 5.5% run rate? And 2, are you confident of maintaining a positive bottom line for the next 3 quarters as well?
Yeah, so Neeraj, it's a question you ask which is difficult to answer in some ways. Of course, our plan is to ensure that profits are much better than what we showed last year. So from a loss of almost 90 crores 2 years back, we posted annual profit of about 52 last year. We hope to go much beyond that, trying to cross 100 if we can. That's the internal plan. But these are plans where we have to, this is a target, we all working at it. There's cost management, there's new products, there's growth in whatever circumstances we're living in. The truth is that it's very volatile out there. It's very difficult to make plans and say this is it and nothing needs to change. I don't think, for example, anybody knew around end of May that suddenly the dollar would suddenly climb against the rupee, and that unsettled so many people, including got us into a bit of a jam in the sense that suddenly the imported items suddenly became costly by 10%. So we had to act immediately, raised our prices, we ensured that the hedging percentage increased so we are not speculating on what will happen. And so those steps are going to be required. If you look at the whole national situation right now, I think my belief is we're already in election mode now. And so I don't think there'll be too much infrastructure or capital goods kind of investment. So our segment 1 kind of business may still stagnate a bit. So we still follow the plan that let's not go only for top line, look at how we'll get our margins up, get our costs down, and improve our cash flow. So that will continue. On the cooling products, I think there's better hope in the sense that as a consumer spending, the monsoons have been good. So I think money would be spent in the rural and smaller towns. So I think we're actually riding on that. I think that may continue. We added capacity last year, if you remember, in Ahmedabad and Himachal to cater to a growing need for cooling products. What is going to happen is we'll have to react quickly and indigenize some of the products, which maybe some import content has to be brought down. So that means the manufacturing sector, the factories may get benefited indirectly. So there are many things. I don't think we can take a steady state plan. But yes, if you ask me overall, in spite of not a very rosy picture out there, we intend to do better than last year.
Okay, how does that translate, since you're talking about that there would be an improvement in cash flows and the working capital cycle, how does that translate into your leverage costs coming down? And what is the repayment cycle that you're looking at in terms of reducing the overall debt on the books?
Yeah, Tanvi, if you remember, 2 years back we had reached a very high borrowing figure of almost 600 crores. And that got us a little worried at that time because we are making losses and borrowing more, which is not a good sign for an organization in the long run. So we took steps to ensure that borrowings come down. I'll be happy to tell you that this year, at the end of last quarter, we were at below 400, and we maintained that. And this year, in fact, we applied one more rule that we'll watch a daily borrowing graph. We were doing it more weekly and monthly. And this daily borrowing graph ensures that the interest cost remains pegged. So cash flow is being tightened, accent on push on collections of debts. Of course, cash flow is difficult. Customers are unable to pay because the cash liquidity is poor. Another factor which has happened is due to the RBI lending rate, the market interest rates actually gone up 1 to 1.5% even for us. So we have to factor that in. These are all, as I said, things are going to happen, not everything to our liking, but I think what we'll need to work on is therefore how do we counter this. But overall, our borrowings are going to be maintained. I think we are now in that situation where profits are coming, that we are more in control of our borrowings position.
Great. We wish you all the best for that, Mr. Jamdar, and hope that the next quarter when we talk to you, the numbers are even better. Thanks so much for taking the time out and being with us on Hot Stocks.
Thank you. Thank you very much.
As Blue Star, hopefully confident about the year ahead. They've turned out a good quarter this time around. Margins have improved essentially for them as a company. 159 is where that one is trading. I'll tell you what, we'll take a quick break while the market is holding out fairly okay for itself. Bank Nifty is the one which is doing the work today. Come back with option strategies of Ashwini, stock recommendations from both Sandeep as well as Prakash. That's coming up on the other side as well.